You know, in the tech world, we are always on the hunt for the next big thing. But what if it's been hiding in plain sight this whole time? Today, we're going to dig into a really bold equity research report that makes the case for one of tech's original giants, IBM.
It's a question that kind of flips the script on how we usually think about Silicon Valley, right? We're always looking for that scrappy, disruptive startup. But what if a legacy player, a real titan, has quietly pulled off one of the biggest turnarounds we've seen in years? That's the big idea we're going to explore today.
So here's the bottom line of the whole report. The market is still looking at IBM like it's the old, slow-moving company of yesterday. But the reality? The company has completely changed its DNA. This isn't just about giant servers anymore. It's about high-value recurring revenue from software and strategic consulting. And that just makes for a way healthier, more profitable company.
So what's the official recommendation that kicked off this whole analysis?
Okay, so this is the headline grabber right here. Analysts have slapped a buy rating on the stock, and they're not messing around. They've set a price target of $350. Now, that suggests a ton of upside, but it's the reasoning behind it that's so interesting. It's all because they believe this transformation is the real deal, it's built to last, and it's churning out some serious cash.
Look, a great store is one thing, but in the world of investing, the numbers have to back it up. You got to see the proof. So let's see what this transformation actually looks like on paper.
And wow, this timeline, it just tells the whole story, doesn't it? You can see that crystal clear turning point. I mean, after years of going nowhere and even declining in 2020, IBM finally hit the brakes, stabilized, and then bam, a return to solid, positive growth. This isn't some lucky quarter, this looks like a real sustained shift.
And this number, this is all about the quality of that new revenue, 58.8%. That was their gross margin in Q2 of 2025. That is a huge leap, and is proof positive that the new stuff they're selling, software and consulting, is way, way more profitable than the legacy businesses they've been moving away from.
And here's the kicker, all that profitability is turning into cold, hard cash. Management is so confident in this new direction that they're guiding for over $13.5 billion in free cash flow for 2025. That is an enormous war chest to innovate, make acquisitions, and give back to shareholders.
Okay, this table is where you can see the whole story in one shot. Just follow the lines. Look at revenue from 2022 to 2024. It's a steady climb. Now look at the gross margin. It's getting bigger every single year. And finally, the free cash flow. Yeah, it took a dip during the big shuffle, but it has come roaring back. This is literally what a successful turnaround looks like in financial form.
So the big question is, where is all this fantastic high-quality growth actually coming from?
And this chart right here, this is the new IBM in a nutshell. Software and consulting, those high-margin, super strategic parts of the business, they now make up more than 3/4 of the entire company. The old-school infrastructure business is still there, it's still important, but it's not the main character anymore. This new mix is what the entire bull case is built on.
All right, let's break down how these pieces all work together. First, you've got software. That's the cash cow, with absolutely insane 83.7% gross margins. Then you have consulting, which is like the tip of the spear. It gets IBM in the door with huge companies to solve their biggest problems. And guess what that does? It creates a ton of demand for their software. And finally, you've got infrastructure, which is having a moment, believe it or not. The new mainframe cycle is booming, and that just pulls through even more software sales. It all works together.
You know, a turnaround like this doesn't just happen by accident. This was all built on a massive, very deliberate strategic bet on two of the biggest trends shaping technology today, hybrid cloud and, you guessed it, artificial intelligence.
So you hear hybrid cloud thrown around a lot. What does it actually mean? Well, think of it like a universal adapter for big business. It lets a company use the best of its own private servers and the best of the public clouds like AWS or Microsoft Azure, and manage it all from one place. For the customer, the big win is total flexibility. You're not locked into one vendor. For IBM, it's the absolute centerpiece of their entire strategy.
And their secret weapon for winning in hybrid cloud? It's Red Hat, the company they bought for a whopping $34 billion. This quote here from Gartner, a huge industry analyst, is so critical. It basically validates the whole strategy. When a giant like Gartner says you're not just a player but a leader with the best vision, people in the enterprise world listen.
All right, let's shift gears to AI. IBM's big enterprise AI platform is called Watson X, and it is already a massive business. We're talking a cumulative book of business, so total contracts signed, that's already blown past $7.5 billion.
So yeah, this is not some science project in a lab. This is a real product making real money. And check out who's actually using this stuff. We are not talking about small startups here. These are household names, huge global companies in banking, telecom, healthcare, all trusting Watson X for really critical AI work. This is the tangible proof that their bet on enterprise AI is paying off.
Okay, so we've seen the strategy, we've looked at the numbers, so what's the final verdict from this report? What's the bottom line, and what are the things we need to watch out for?
Look, no investment is a sure thing, and the report is pretty upfront about the risks here. First, IBM is in a knife fight with giants like Amazon and Microsoft. Second, if the economy tanks, companies might cut back on their IT spending. And this is a big one. The stock isn't the screaming bargain it was a few years ago. The market is starting to catch on, which means there's a lot less room for error.
Now, this is a really important point about how the company is valued. If you just glance at its recent earnings, its price-to-earnings ratio, or PE, looks kind of expensive at around 44. But the report points out that number's a bit wonky. It's been distorted by a big, one-time accounting charge. The more relevant number is the forward PE, which is based on what analysts expect them to earn in the future. And that's around 26, which is a much more reasonable number for a business of this quality.
So at the end of the day, the final verdict is still a buy. The analysts are basically saying, yes, you might be paying a bit more for the stock now, but you're paying for a much, much safer business. It's a company that has been fundamentally de-risked and now has a clear, predictable way to grow its profits for years to come.
And that really leaves us with the big lingering question, doesn't it? The evidence is pretty clear that the turnaround is real. The financials are solid, the strategy is working. But engineering a comeback is one thing. Winning the next massive wave of technology is something else entirely. IBM has put itself in the game to be a huge player in enterprise AI. The only question left is, can they execute? Thanks for joining us.